Happy Friday and good afternoon from the Shreveport office of Eagle Financial Management Services for another edition, the latest edition of the Wild William and Jack Show.
We're back. It's been a little while.
We have been, it's been a couple of weeks. We have made some posts on Facebook in the absence of the Jack and Bill Show. But I spent Bill and I 2 weeks ago went fishing, trout fishing on the Little Red River in northern Arkansas. And
work related.
Yes, it was work related. And we did catch a few trout and a walleye. And this past weekend, William was at a wedding, and I was in Friday afternoon in southern central Arkansas again at Lake DeGray, 1,100 feet deep, 100 feet out in the water where we were staying. Really deep, gorgeous, beautiful lake.
Did you touch the bottom?
I could not touch the bottom. We were concerned. Some of the people were concerned because we were doing some climbing up these rocks and jumping off of, I wouldn't call it cliff diving or anything like that, but it was scary for me. I partook. But there were initial concerns at first about the depth of the waters there, and nobody could touch the bottom.
And the Speedo attire.
The Speedo. Not I. Well, Bill, today the S&P 500 and the rest of the stock market closed out the month of July on a little bit of a negative note for the day, not the month. We went into today with the S&P 500 up 18.6% on a total return basis through yesterday. And we went down roughly 25 points or 0.6% on the S&P today. So call it, market has made 18% this year. All of the markets were down across the board. The equities markets, that is, Dow down roughly 143. Small cap Russell 2000 down a little bit more, about 0.75%. And I find that interesting to note that small caps actually lost money during the month of July. Mm-hmm. So a little bit of a shift in leadership there to bigger names. The NASDAQ market leading the way down today, down 0.75%. After Amazon reported earnings after the close yesterday, they had very strong profits, but there was a miss on their revenue growth, and the next quarter's revenues projected to be kind of in line with what they just reported. So Amazon was down 7% today, approximately, and the market really punishing them.
Yeah, that's unusual for a company of that size. Have a one-day decline like that.
Yeah, it is, and especially to have a huge beat on the earnings side and just a small miss on the revenue side. I think the market was looking more into forward-looking statements, but I don't think Amazon will stay down, that long. West Texas Intermediate was closed up a little bit today, over $73 a barrel. Gold down about 1%, $18 an ounce to close at $18.17. Bitcoin rallied this week. It's way down from its yearly highs of roughly 65,000 a coin. Closing today just under 40,000. Silver down about 1% at 25.53. Bill, I was looking on the bond market side. Now, bond yields had a big downturn month of July. 2-year Treasury note yield closing today at 0.2%. The 10-year at 1.23. We had been up to around 1.7, I think.
So bond prices rallied as yields went lower.
That's correct. And the 30 years come back down to about 1.89. And that's, on the heels of very strong inflation projections and
growth.
Growth and CPI year over year at 5.4%. So generally, historically, bonds yield about 2% more than inflation. And so you could say, why isn't the 30-year Treasury yielding 7.5 instead of 1.89? Something doesn't seem right there.
No.
So
I don't think the Treasury Department could afford debt service at 7.5% interest rates.
Not going to happen.
No,
it's not going to happen. So the big news of the day, Bill, is Stacy was in here listening to a live broadcast from Governor Edwards of Louisiana. And Louisiana is one of the worst states in the union with regards to vaccination.
And a lot of other metrics.
So I think we're kind of scoffed at by the rest of the world as a bunch of Cajun
or worse
swamp monsters that, won't come under the needle. But anyway, so there are more people hospitalized in Baton Rouge right now than in the whole state of Louisiana a month ago. And I think we had 31 deaths yesterday in Louisiana. So it's a bit, the Delta variant. I mean, there's two ways to look at this from our perspective, and that is from a health concern perspective, and then what are the economics of this and market implications. And I think, I'm encouraged by this thing was really running rampant in the UK and appears to be tailing off. I also read in today's Wall Street Journal, Bill, that Europe's now gotten ahead of us as a nation with vaccination rates. So I think that as more and more, the Delta variant is way more virulent. The CDC coming out with a report today saying that they're more contagious than chickenpox, which it may be. Earlier numbers were saying 50% more contagious than the Alpha or the original variant, now saying 10 to 12 times more. However, it's not nearly as lethal, so again, most of the deaths are occurring. Of course, we've had a year and a half now to learn how to treat this thing. And we've actually profited from Pfizer and Moderna. Pfizer and also Gilead Sciences makes remdesivir. I didn't look at their numbers yet. That stock has performed pretty strong here recently. But the Pfizer BioNTech collaboration, man, Pfizer this week came out and ratcheted up expectations for their sales for vaccinations 30% higher. They reported revenues of $15 billion in the second quarter, and $8 billion of that came from vaccinations, and they're looking to do over $30 billion this calendar year just in revenues from vaccinations. And interestingly, I saw in here today, the nation of Israel has actually gone ahead and worked out an arrangement with Pfizer to do a third booster shot. So they're saying, if you haven't had a shot in the last 5 months, go ahead and get the latest booster. So it's looking more and more like this thing could be an annual, flu type thing. But I'm awaiting the day, hopefully, and I believe that not too far into the future this year that we attain herd immunity, and we don't have to worry about infecting or contracting.
I'm also looking at potential agenda behind these decisions because there's an economic aspect to this. Okay, so we're looking at, or Congress is looking at, more stimulus. There's a moratorium on the eviction of renters due to COVID, and that's supposed to cease today. So there's a push by the administration to extend that moratorium. The Fed is still very actively engaged in stimulus efforts. So if we are to, as a nation, come out and publicly declare victory over COVID, that makes it very hard to justify additional stimulus.
Totally agree.
So it does seem like the government wants to keep people dependent on government assistance in various forms, and this is part of the narrative. Does that sound bad?
I think, Bill, if you work, if you work inside the 495 Beltway, you kind of feel inclined to do something
I guess so.
when you hear these numbers.
Well, and then the administration is now pushing for all federal employees and federal contractors to get vaccinated. But it's interesting that it is unions that are pushing back. And this administration, claims to be aligned with the large labor unions, but it's the labor unions that have the clout, and they're pushing back. They don't want it. They don't want it. Anyway, enough of the political commentary, but I think we have to factor all that in.
Toy prices have been escalating. I see in today's Wall Street Journal.
We
might have to consider giving a stimulus package to parents of children so they can buy more expensive toys.
Well, speaking of stimulus, all right, how about here's a transition, because today's show is really focusing on news of the day issues, and we had a Fed meeting, and the Fed is still accommodative. Fed funds rate is being held at the 0% bound. The Fed is acknowledging inflation, but they are insisting that it is transitory. And I couldn't help but laugh watching Fed Chairman Powell perform his verbal jujitsu, trying to explain what transitory inflation means. It was impressive, very impressive. I mean, it was legal speak. He could win in a courtroom. Did you watch that?
I did not see
gosh.
that. Little tap dancing going on.
Oh, did he tap dance? So the Fed is still in there doing all they can do right now, in spite of rising inflation, economic growth. I'll transition to another big news topic of the week. We had the second quarter real GDP number released by the Bureau of Economic Analysis, and their advance estimate was 6.5% economic growth in the second quarter. Now, that was slightly ahead of 6.3 in the first quarter, but it came in way below economists' estimates of 8.4. So the expectation was 8.4. We came in at 6.5. We did see, drilling down into that number, we did see strong increases in personal consumption, but that was offset by large decreases in inventory investment. And, that makes sense. because we're very aware of supply chain issues. And, from the very beginning, I mean, let's take it back to China and the cost and lack of availability of shipping containers, the lack of availability of truck drivers and warehouse employees. The supply chain is totally messed up. So that makes sense to me. But that number is a little concerning. I mean, it's a good number, no question, but we certainly expected more than that. We had an unemployment data release, and according to the Labor Department, there were 400,000 initial unemployment claims last week. The estimate was for 380,000, and that number of 400,000 is about twice the level that we saw pre-pandemic. So unemployment is still a concern. And, we're anecdotally, we're hearing stories about disincentives for people to go back to work. Certainly the stimulus payments have affected people's decisions on going back to work. I mean, I guess you can't blame someone if they can make more money staying home than working. But we're going to have to do something there. That's for the elected officials to decide. But my gosh, everywhere you go, and it's not just here, it's everywhere you go, there's a shortage of employees.
True. I mean, that's going to be getting back to the question of whether inflation is transitory or not. I think 2/3 of all inflation comes from unit labor cost increases, and we've got an aging population as well, Bill. So there are, I think we crossed this line in the second half of this year. More than half of Americans are getting a check from U.S. government.
That's correct. We are becoming a nation of dependence.
Not something I view as sustainable. Yeah. What else?
Hey, what about China? China has been making news headlines. The Chinese stock market has had it's been a pretty rough performer. It's been in correction mode. We've seen the worst sell-off in the Chinese stock market, 31% from the peak in February. It's the worst sell-off since 2018. We've certainly seen bigger sell-offs in emerging market countries and specifically Asia and more specifically China. But this one caught people's attention in particular because of the reason behind it, starting with regulatory crackdowns from Beijing. So we've seen the communist authorities cracking down on these big Chinese tech companies. Their stocks have taken a hit. We are also seeing on this side, we're seeing threats by U.S. authorities to delist certain Chinese stocks because they are unwilling to meet our regulatory requirements. For example, audited financial statements. Those are important. And if a publicly traded company is unwilling to produce audited financial statements, truly audited financial statements, I mean, that's a problem. So there's been a lot of talk about this, and even questioning about whether China is even investable. I don't know. I mean, my thought on it is this: when we're talking about big Chinese tech companies, Alibaba, which is China's online e-commerce version of Amazon, JD.com, another e-commerce firm and the largest retailer in China, Baidu, Tencent, I mean, companies like that. These are companies that have a lot of growth opportunity ahead of them, and they're trading at very nice discounts because of this sell-off. So I would say this: for someone who's willing to take risk, country risk, regulatory risk, there could be great reward for someone with a longer investment time horizon. What do you think?
I agree. I was looking at Mark Grant's column. He's a frequent guest on CNBC, works for B. Riley FBR, and he said, "Don't be an idiot regarding investing in Chinese stocks right now." So he's not a big fan, but
No.
I think when you look at some of the huge names that you mentioned, I think it's prudent to have a little exposure for someone who can tolerate risk.
Yeah, I cannot see China cracking down to the point of imploding their economy and chasing off foreign investment. It's one thing for them to crack down on publicly owned, or I should say government-owned enterprises, but this crackdown on privately owned enterprises can backfire. China has to realize that, but I'm no expert on China.
Well, if you don't like investing in China, you could buy shares in HOOD, Robinhood, which was priced yesterday at $38 a share and slid to $34.62, down 8.4% from the IPO price, bouncing today to close somewhere around 36. So one thing I don't like about Robinhood, the way they structured the IPO, this was a really hot stock pre-IPO and so forth that fizzled here recently. It was priced at the bottom end of the range. Not a good sign if you're looking for a hot IPO, but the insiders are able to share a big chunk of their stock immediately. And these are referred to as lockup periods. And usually you have to wait 180 days or more before you're allowed to sell your shares. And these guys were able to sell quite a few shares yesterday and today. So, that's not good.
No,
Anyway.
and one thing to look at, and I think this is just good advice for any investor, is look at a company's products and services and how well regarded they are in the marketplace. Okay. Well, in the case of Robinhood, their account holders don't like Robinhood.
Yeah.
They don't like Robinhood. They have an axe to grind, because of actions that Robinhood took, months ago on some of these meme stocks. So that's just an opinion of mine. But if the users aren't happy with the product or service, you may not want to invest in it.
They've got quite a few class action lawsuits.
That's true.
Filed against them.
And we could ask our in-house millennial, and he could certainly give us a better understanding on this. We'll save that for another day. Hey, what I'm getting a lot of questions about is, are we heading for an imminent correction in the stock market?
Well, historically, let's see, what do they say? Sell in May and go away.
And that's
most
a
of the
seasonal
money
thing, and sometimes it works, sometimes it doesn't.
Yeah. Stock market making most of its gains historically between the months of November and May. And I think, you've got a stock market bill that's already up 18% this year.
Mm-hmm.
So I would tell all of our viewers that the easy money has already been made. It would seem, are we vulnerable to a correction? If the Delta variant if government officials require lockdowns and mask wearing and all this kind of stuff all over again, uh, and we go back to where we were, last year, um, we're going to have corporate profits getting punished and so forth.
It runs on toilet paper.
Yeah, exactly. But I really don't think that's going to happen. I think that, one of the things that we've done as a firm, that's a good question. Trying to predict that is an endless, worthless, exercise, because it's a coin toss whether you're right or wrong. We really don't know. The Fed has everything propped up right now. They're not tightening anytime soon. The stocks are the only game in town. What we like is investing in that which is scarce, which is anything that pays above market or above treasury dividend yields or interest rates. And I think that's a great place to be. We own a couple, I don't know, maybe 3 or 4 business development companies that have dividend yields as high as double digits, and
also provide upside price appreciation.
That's correct. So I mean, those are instruments that I think are wonderful, especially if you think if we have a market downturn, it's dampened by those high cash flows that you're generating. So, what do you think?
Oh, I totally agree. It's very difficult to try to time a market top, just like it's very difficult to try to pick a market bottom. So don't pick bottoms. Don't time tops. And, we can look at a number of things and say that the market is pricey, it's overvalued, it's extended. We can use a lot of terminology that would be apt descriptions of the current market climate. But in spite of that, we know from experience that these markets can go far higher for far longer than what is justifiable. And that's because markets are comprised of people, and people are irrational.
Absolutely.
So who knows? Who knows? I think it's smart to be prudent, more prudent than otherwise when we're seeing markets that are in these conditions. I also believe it's important to be nimble, be more tactical, be more aware of areas of the market that are more pricier than the broad market, perhaps up your quality. Jack, you mentioned earlier that small caps have lagged. This could be part of that as we're seeing a shift, because we have seen smaller names, value names, the reopening names that we've talked about a lot outperform. And here recently, we have started to see a little bit of a shift back the other way. So I guess the message here is everyone needs to be on top of things and get some help if you feel like you need professional help for your investing, that is.
Yes, sir. Well, Bill, big sporting news coming out yesterday.
Wes said we couldn't talk about sports.
The SEC, I wonder if he knows which 2 teams were unanimously voted into the SEC. That's not the Securities and Exchange Commission.
No.
That's the Southeastern Conference, where it doesn't get any better. But OU and Texas have been voted in, starting play in 2025. Takes a while to work out these schedules, in advance. And some of the schools of the Big 12 were adamant and highly disappointed. President of Oklahoma State University saying more than a few unkind comments
I don't like it personally.
Uh,
I mean, we are getting the strongest team out of the Big 12, Oklahoma, and we are getting the wealthiest school out of the Big 12, UT. But these are Southwest schools, not Southeast. I don't like it.
it's all about the money.
It's all about the money.
Television revenues. Well, changing gears though, William. Okay, if I were to ask you, I just looked at this. We're a week into the Olympics now.
We are?
Yeah.
When did it start?
Started last Friday, a week ago.
Oh.
And do you know who has the highest medal count?
It better be the U.S.
I'll tell you, Bill. We have 41 medals, gold, silver, and bronze, and China has 40.
Ooh.
So and Japan, interestingly, has 28. But we're in third place in gold medals. Some sports news media likes to show the medals count rankings by gold medals, which has us in third place behind China leading the way with 19 gold medals, Japan at 17, and the U.S. at 14. I think with 9 more days of track and field, that kicking off yesterday, I think the U.S. is really going to shine there. And as you say, we better. You know, it's interesting. I looked up. I didn't understand. I was looking at the difference between China and ROC. Do you know what ROC stands for?
Republic of China.
That's what I thought. It's Russian Olympic Committee. I bet most people don't know this. They're in 4th place in the medals count, but Russia has been banned from the Olympics because of cheating, anabolic steroids, and they got a workaround for those athletes that felt cheated.
That's very kind.
And they're competing under the flag of the Russian Olympic Committee and doing a pretty good job. 4th place in the medal count.
Hey, I've got a rhetorical question since we're talking about the Olympics. If crypto is the new gold, then why don't they award crypto medals?
Crypto medals. I think we'll have to leave it at that. Because it's a belief or an idea. But hey,
a make-believe medal.
if you're under 30, you might prefer that. There's no telling. Jesus help us. Okay, I think man, I'll tell you, it's Friday afternoon. My clock over here is stuck on 8 o'clock. I thought it was 8 o'clock, and I found myself yawning. But that's a wrap for this Friday. I think we'll be back here next Friday. We'll try to talk to you during the week.
We're still an essential business, so if they lock us down, we'll still be working.
We've been here the duration,
the whole time,
all the way through
for you,
except for Snowmageddon.
Oh, that's true.
When the 4-inch water pipe burst, and you could hear it flowing down the elevator shaft, and it was 10 degrees outside.
Horrible.
But yes, so we're home from Arkansas, in town for a little while, and working diligently. If you have any questions or comments about the markets,
Westley is here to answer your questions.
Give us a phone call, and have a great weekend. Watch out for low-flying aircraft and make good decisions.